Hello guys, Joseph here. Thank you so much for joining me. This is my second ever video on YouTube, so I'm gonna try and make it a little bit better than the last one. So what I usually do is show you guys what I'm expecting to happen in the forex market in the coming weeks, so in terms of technical analysis and possible trade setups. So in today's video I've got a very good trading opportunity that has just finished setting up on the Aussie dollar pair, and that's what I'm going to show you guys. So let's head over to the charts, and I'm going to show you guys the technical reasons why I'm shorting this pair. So I'm looking at the Aussie dollar on the 1 hour chart, and the first thing I'm going to do is draw up a trend line. So you can see that we've got a trend line resistance on this pair. Okay, I'm not really a trend line trader, so I'm going to show you guys other technical reasons why this is a valid short opportunity. And the first reason is the obvious reason, which is the market, the fact that the market is bearish. Now if we looking at this chart, we know the market is bearish because what does a bearish market do? Like, what is the characteristics of a bearish market? Okay, if we are in a bearish market, the market typically it's going to move like this, making, obviously we got initial structure low, we got a retracement, we got a new structure breaking the previous structure low, and then we get a retracement, then we get another structure forming a new structure low. So basically this is the characteristics of a bearish market. So looking at the chart right now, we have got something similar. I mean, it's not perfect, but it's something very similar, because we got our lower lows right there, another lower low, we've got it right there. So that's the first reason, that's the first technical reason why this pair is a short. Now the next reason I'm going to be looking for is what has the market been doing around or near the trend line resistance. So if I go ahead and blow that up, we can see that the market has actually formed a double top. So this is another technical reason. But what I'm going to do now, I'm going to bring in my RSI, try and see if we can find another technical reason for us to short this pair. So bringing in my RSI, I can see that where the market has formed a double top, I've got a bearish divergence on my RSI. Bearish divergence on my RSI. So that gives me another reason to short this pair. So let me go ahead and delete this off, and then I'll try and find a different other reason as well. Because guys, the more reason you can find, I mean the more technical analysis that you can do, because it's all about building a case for entry. You have to look at a chart, you have to break it down and find that trading opportunity. I mean, it's not always going to work out, you know, you're not always going to make profit on every single, but it's good that you do it right. So the next thing I'm going to do is I'm going to look at what the market has been doing recently. So we've got the market here. This is the recent structure. The market formed the recent structure right there, and then we had a break of that structure, and now the market has come back into where that structure is. So this gives us another reason to short this pair. So now I can even go one further and bring up my Fibonacci retracement tool, swing high to swing low, back down again, and I'm looking for the 618 retracement. The 618 retracement is generally one of the strongest Fibonacci retracement levels. So look what happened. The market came right into the 618 retracement and formed a double top. So guys, we've got more than enough reason for us to be short on this pair. We got a trend line resistance, we got a bearish market, we got a double top formed near the previous structure, we got a bearish divergence on the RSI, and we got a 618 retracement on our Fibonacci. So the next thing to do is talk about targets and stops. So I'm going to go ahead and delete all these things on this diagram. So obviously this is the area where we're looking to get short. So let me change that color to blue. So if we're looking to go short around that area, our stop loss is going to go above this previous structure high. So this is where our stop loss is going to go. Let me change this to red. So our target, we're going to be shooting for a target back into previous structure. So we're looking for this market to come back down into this previous structure, and that will give us a risk to reward ratio of something that's greater than 1 to 1. So let me just go ahead and confirm that. So there we go. We got a risk to reward ratio of 1.37 to 1. So this is a valid opportunity, to short this market when trading opens on Sunday. So the next thing I'm going to talk about is actually on this currency pair again. We've actually got an advanced pattern setting up. So let me go ahead and take these ones off, and then I'll show you the advanced pattern. We've actually got a Gartley pattern setting up. So let me go over to the 4-hour chart, show you guys. Okay, the Gartley pattern I'm looking at right there, it's actually a bullish Gartley pattern. So we got initial move right there. We get a retracement. We should come in at least the 618 retracement. So let me go ahead and bring up my Fibonacci ratio. Yes, we got the fixed 618 retracement. So that is a valid X to A retracement leg of a Gartley pattern. Our B to C leg should come in at a retracement of at least 382. Did we get a 382? Of course we did. And our D leg, our C to D leg, which is our entry point, should come in at the 127 extension of the A to B leg. So the A to B leg from there to there, we're looking at the 127 extension. So we're looking for this market to come all the way down to this 127 extension. So let me go ahead and draw up the Gartley pattern for you guys. There we go. And there's one thing that I wanted to show you guys as well. We've actually got a harmonic move round about where that Gartley pattern is about to be completed. So we got, let me actually start up from right there. Change this color to what? Purple. So I'm going to go ahead and copy that. I'll clone it, I should say. Clone it again. And clone it again. So guys, there it is. We got a harmonic move that's going to be completing right where the Gartley pattern is. So obviously with Gartley patterns we know where our stop loss are going to go. It's going to go below X. So our stop loss is going to be somewhere there. Let me change that to red. And our targets, our first target is going to be the 382 retracement, assuming we get there. we're gonna have our first target right there. And our second target is going to be at the 618 retracement. So all the way up there, that's where our second target is going to be. And our stop loss, giving us a very good risk to reward ratio. I mean, this must be somewhere close to 4 to 1. Let me just bring in my long position just to check. Yeah, so we got a risk to reward ratio of at least 4 to 1 on the Gartley pattern. So if this market opens anywhere near that structure, we know we're going to be short in this pair, because we've got enough reason for us to short this pair. And then obviously if that happens, because there is a big if that happens, then we can be looking to enter the Gartley pattern on the opposite direction. So this is it, guys. Thank you so much for checking this video out, and I hope you've learned something. And if you did, I would appreciate a positive comment or not. But yeah, I just wanted to share this with you guys. Thank you.